Hey everybody, it's Brad and Greg from Ranch Capital Advisors, and this is our Christmas edition. You're looking very festive today, Brad, and what is that on your sweater there?
Oh, it's the always dangerous Christmas dragon. I mean, Christmas dinosaur, that is. Looks like a dragon, too.
Gotcha. All right, looking very festive.
Nice little ugly sweater pickup that I got a couple months ago.
Yep, some dog hair from Wrigley the Rally Dog.
To go along with my hat today, so at least I'm in the spirit, Greg.
Yes, so I wore red. Come on.
I'm not sure what you're dressed for, but...
Success, buddy, success. So anyways, in this episode, we are going to be discussing a few things. Of course, the historic $900 billion package that was just passed by Congress, hopefully, right?
Correct.
And we're going to be discussing the upcoming Senate race on January 5th. I think is the
correct.
All right,
big day.
2 for 2, and then we will be speaking about our short-term view over the next month and 12 months of the market, and also some of our longer-term views that we're seeing. And let's start with the stimulus package, Brad. What's your thoughts on this historic, the second largest stimulus package ever in the U.S. history? Just shy of the first one that we've already experienced. So we have 2 huge stimulus packages and money being put into the system that should really keep prices pretty stable. Wouldn't you
for
think?
Everybody out there, just a quick note. We're talking about stimulus. We're not talking about the omnibus spending bill, which is the bill that's giving a lot of, generating a lot of the issues the past couple days concerning the funds that are being appropriated overseas and some of the fallout that Congress is receiving because of that.
6,000-page document, I'm sure there's some pork in there.
It's any more pork in there, it would start flying. $700 million to Sudan.
Start flying, pigs fly?
Pretty much. They also get slaughtered, Greg.
Okay, gotcha. All right.
So there are a lot of questions coming up about the spending bill, which rightfully so if we're in a difficult period of time in this country with COVID-related shutdowns, unemployment, just a disaster. A lot of U.S. citizens are now questioning why we are giving so much money to different areas instead of to our own citizens. That may throw a wrench into the approval of all of this, as it has to be signed off on by President Trump. There are some ways around it, but he is looking for, standing up for the people and saying we want more money for U.S. citizens and less money for a lot of this, what could be considered nonsense spending.
So, like the initial one is everybody under a certain income would get $600 a person, and President Trump would like $2,000 a person. And he actually has some leverage, right?
He has a lot of leverage because it has taken so long to get anything passed, which there was a lot of gamemanship as far as politics go pre-election. But it's been very difficult for everybody to come to the same, get on the same page as what to give. So, the stimulus bill as it pertains to Americans is about $900 billion, which, roughly $700 billion of that's going to be deployed over the next 5 months or so. And again, you do get the tax return rebate under a certain income. You're going to get $600, which President Trump would like to up, and there's a chance to do it. It's just going to take a little work. Most importantly, there is, about $330 billion for small business aid, which is important. A continuation of the PPP program for
PPP2, yeah,
which has helped out in a big way as far as keeping businesses afloat.
Now, if you want to know if you have a business and if you qualify for the PPP2, one of the biggest things is to be able to show that you have a quarter in your calendar year that your business was down 25% in comparing it to a quarter of the previous year. So if you can show that, then you would actually be eligible for more cash, more money. And they did simplify some of the things with the current PPP tax-wise. Before we're not going to allow you to take deductions for the way you spent the money on your employees or your rent, your expenses, and now they've changed that. So it really is a tax-free forgivable loan. If you receive the money, you also get the deductions for the expenses that you use it for. So that's going to inject a lot more money into businesses because it's going to save them a lot of money in taxes, which is a good thing.
There's a lot of consumer aid, which we talked about, the $600 tax payments, tax refund payments going out to citizens. A large amount of unemployment insurance benefit has been added back in, which some of that will be retroactive. It's going to be additional $300 a week, which is about half as of what people got on the initial program. But hopefully this will provide a bridge to get to a point where these vaccines can become more mainstream and we can get COVID under control enough to a point where a lot of businesses are allowed or feel comfortable reopening. Again, we are going to be helping fund the airlines and different forms of public transportation. About $45 billion set up for paying for transportation needs, reimbursements. There is some highway spending bills, which, at $10 billion, we need a lot more highway spending than just $10 billion in this country. And finally, healthcare, another $50 billion for healthcare, which is probably less than what initially was expected. Again, that's mainly going to now go to buying vaccines, as well as continued testing and distribution of the vaccines throughout the country. So it's really just a continuation of what we saw in March with the CARES Act. A little bit less spending on individuals, but enough there to help out with the small business community, which has been decimated by shutdowns.
And we saw how the stock market reacted, slowly reacted after the first CARES Act came out, and how much it, really just boomed in stock prices. So are you expecting, what do you think, the same kind of results?
It helps.
Yep.
It doesn't hurt. It definitely helps. And we think that people in need are in a worse position now than what they were back in March and April. So, even with PPP money, more of this money is going to be spent than what it was used for a few months ago. So at the same time, it is a benefit, but we still have to put our focus on liquidity back to the Fed and their statements from last week, which, we might not see a Fed hike until 2024.
Yeah. Very accommodative. I mean, they really want inflation to pick up, meaning they want prices to go higher, and have made it, basically, you just stated, we're going to cause inflation and do whatever it takes, and that's going to push, really all prices up. So there's a lot of support for investing in equities over bonds, for example, and especially if interest rates start creeping higher next year, you might even see a large rotation coming out of bonds and into more equities, pushing prices even further. So it's a very bullish case, and of course we still have our problems to deal with. One of the biggest issues I think that's going to affect the markets is coming up in January, like we talked about with the Senate race.
Yeah, it's we would like to sit here today and give you guys a outlook on what we see for next year as far as the economy and the market, but there's really no reason to do that until we find out who's going to control the Senate. And
that will just mean like different sectors, right? Like I think the economy is going to recover, but definitely the Senate will key on what sectors of the markets are going to benefit the most from a 50-50 Congress, a more Democrat or more Republican. And
it will be important from a tax standpoint that Republicans take the Senate. as far as the market goes, we're expecting the market to remain strong. But if there is a win by Democrats in the Senate in Georgia for the Senate races, it's going to call into question Biden's initial tax plan, which would be at least initially market negative. Mm-hmm. So at this time, we've seen a rebound of sorts in the betting odds for the two Republican candidates. So whereas you can't take any polling or betting odds really at heart anymore after what we've seen the last two presidential elections, right now there's about a 75%, maybe even slightly more chance that Republicans win both seats, which gives them a better chance of winning at least one seat, which is all they really need. The passing of the stimulus bill has provided a nice bounce to expectations of Republican voters and the outcome. But hey, I mean, what we saw in November in a number of different races, anything is possible.
Anything, yes. And I think kind of despite who wins, though, like the markets from a historical perspective, like when you're coming off a big rally off of a major low, like we've seen, typically the follow through is pretty good, isn't it?
Yeah, like we've talked before, we've, going back to the periods of time, April and May when we still, or March when, the sky was falling. We started building, it was a week, then it was 2 weeks, then it was a month, then it was 2 months, then a quarter, where we could go back and compare what we had seen on our end to what we had seen in the past in similar situations as far as declines and then rebounds. So I think you have some information about what we've seen in the past as well as what we should expect going forward from this standpoint.
Yeah, well, historically, going back to 1950s, when you come off a major low 9 months and have a very good 9-month run, typically the next 9 months, most of the time is very positive, averaging another 8%. Some years more, some slightly less, but the momentum is certainly still there. I'm sure there'll be some hiccups along the way, but everything is pointing, in our view, to higher prices still going into next year, next 9 months, 12 months, and we can reassess at that time. But.
And we expect, at least for the first quarter of 2021, things remain should be rather strong. We do expect to see a little bit of weakness as the calendar turns over, as we always do at the beginning of January, just from people taking capital gains that they didn't want to take in 2020. So we might see a little weakness the first week and a half of January. That should be bought. And as long as the Fed remains accommodative, and liquidity remains strong,
we reopen,
things are going to continue on.
Yeah.
We've begun to seen some rotations throughout the market, as we discussed last time, and it continues to grow as the companies that benefited from stay at home have kind of flattened out a little bit.
Yeah.
And we've seen rotation into a number of different areas, like even the food sector, which is actually showing inflation for the first time in probably a decade, giving the food companies actually some pricing power for once.
Yep.
So that's going to be a positive. So next year there'll be a lot that remains the same, but there's going to be a lot that changes from a simply a valuation standpoint, and some of the other areas of the market getting their day in the sun.
Yeah, I think we agree that tech is still a great long-term place to be invested in. We're such believers in this innovative economy that's occurring, and that's a very long, secular theme. We think that we're only halfway through this 20-year bull market that began in 2009, and so it's a really great time from a longer term perspective. And of course, there's always going to be times when it feels like the market's very vulnerable. It almost always feels like that. There's always something to be concerned about. But I would say there's a high probability that some of the laggers this year, which has more been the value, the financials, the energy, even dividend stocks that certainly have lagged the technology sector, which is by far the winner, is that they could all become next year's real winners because they have a lot of catching up to do. They're cheap. Technology is very expensive right now because a lot of money has gone into them. And they're just due for a cooling off period, but they're certainly, the long-term perspectives of them are great. But it's, definitely looking at some of the more small cap names versus large cap, I think makes a lot of sense here, especially as we reopen. And then the travel, stocks, travel industry, hotels, cruise ships. I'm probably stay away from the airlines still. I'm just never been a big fan of airline.
But there's a lot of money that's sitting there, not on the sidelines to invest, but sitting there in people's pockets. That need, especially with retirees here in Florida, that would take 2 or 3 trips a year and have been shut down basically for the last year. As things reopen and people get more comfortable, there's going to be a lot of money that's spent. And that really goes back to looking at this spending bill issue that we have now, is if instead of giving those funds away to other countries, if those funds are kept in the U.S. economy and spent again and again and again, how much benefit would we see from $1 spent here in the U.S. versus moved overseas to another country? So the reopening is going to be huge. It will be huge as long as we're allowed to do it. I know President-elect Biden was out yesterday with some negative comments about the virus, and the worst is still in front of us. We try to stay positive with a positive outlook and realize that, hey, one day at a time, we're going to get over these issues and move forward, and we'll be on to another issue in a year.
Right.
It's just always an issue after an issue, but you've got to get past
life.
This one first.
Yeah. And we'll just pray that these vaccines are helpful and definitely brings a lot of hope and peace to people looking forward to the 2021. I think everybody would like to just close up 2020 and forget about it. But we're very optimistic on 2021. And if you'd like to discuss your own portfolios, please feel free to reach out. If you have any comments or questions, feel free to reach out to us. We'll include them in our videos. And so we want to thank you for watching. We wish you have a very Merry Christmas and a happy holiday and a great new year. So just God bless you and your family.
Take care.